What's going on, everybody? Welcome back to another video. Yes, we got back-to-back videos this week just because it's been a crazy week. If you guys were trading the stock market, if you check your long-term portfolio, you might be freaking out a little bit, and it's okay. It is normal to feel the sense of freaking out, panicking if you do see red and you're not used to this, but I'm here to calm everybody down. Let's look back and let's chill. Let's first focus on why is the market selling off today. You might be questioning if you don't keep up to date with the news, or if you do keep up with the news, you already know it was due to Evergrande, one of the China's biggest company when it comes down to real estate developer companies. It employs over 200,000 people. It is approximately that indirectly impacts about 2.5 million jobs, because as it is a developing company, employs contractors, people that get lumber, all kind of things, plumbers, electricians, so many things, and is a big deal in the Chinese GDP. So how is the Chinese one of the biggest companies? In 2018, it was the biggest, most valued real estate company out there. How is such a big company in 3 years, especially when the market has been booming so much, on the brink of bankruptcy, in the brink of causing potentially financial crisis, as is said by some investors? It is what is worrying people on the stock market today. It remembers people of 2008 when the Lehman Brothers had a very similar situation. One of the biggest developers had to go bankruptcy. It was one of the dominoes that led to the financial crisis. And I know this is in China. You might be wondering, Antonio, how something in China, how can China affect a potential financial crisis that can spread all around the world? Nothing like that's ever happened before, 2019, 2020 type of stuff. Well, it is because they over leverage. If we just take a look at the leverage companies in China, is much higher, almost twice as higher as the US and most of the Western country. A lot of the companies in China, China is really trying to push, growing their economy and doing all kinds of things. All those companies are over leveraging and are causing real big issues when it comes down to liabilities. And the main issues I saw with Evergrande is that they were trying to do too many things. They have all kinds of contracts. They're building the biggest stadiums in the world. They were building electric company that's like, they already have so much electric companies in China and with the US and everywhere, that it's like, why would you focus so much money, so much time on something that you're not even great at? It's always comes down to the thing when you gotta focus on what you're good at. So you're good at real estate, stick to that. But they over leverage, they spread themselves thin, and now they're in really big issues. So what I think happens, I think that China will probably bail them out to some extent. Personally, that's just my opinion. Doesn't mean does it have to happen? No, of course. But I think the risk of what China can cause if they do let them foreclosure, as they're trying to sell all these buildings and a lot of these assets they have, but having such a hard time even selling them, even if they're selling them at major discounts, people still don't want to buy them. The risk of potentially them foreclosing and going in bankruptcy, I think, is too big for China. I think they would rather get in now and take care of business now, help them out as much as they can. And China does not shy away from bailing people out. China does not shy away from the government getting involved if it needs to. As we're filming, the Chinese government, especially lately with the stock market, has really got involved with a lot of its companies, causing massive sell-offs. So I think personally, this is what's going to happen. But like I said, it doesn't mean it's going to happen. Just what my belief is. If we look at the charts, straight just looking at the charts, we understand, like, if we zoom out a little bit, let's look at the last 10 years. This looks like it's been barely any selling off. Like, we see this huge massive run that we've been on, and we understand this massive run is most likely, it's just not that normal. It's normal for some selling offs to happen. And honestly, if we can go back to almost a full year, we have not seen a minus 5% sell off in the stock market this whole year yet, which is almost unheard of. It means that we were pretty much due for a breather. And the way I see it is, a lot of times we had a little bit of this news that helped with giving reason for a lot of these investors to give the market a breather, sell off a lot, or take some profits. Even getting leverage from understanding that being over leveraged can be a big issue, which we have seen with a lot of hedge funds which missed on a lot of gains in 2020. To being all extremely over leveraged in the last few months, as we saw back. If we go back to looking at April, it's been over 40% over leveraged with a lot of these hedge funds, and it's usually not a good sign. Usually, it's been proven that if the hedge funds are too bullish in the market, it will cause some sell-off. So I'm glad we see a little bit of a sell-off, and it's not time to panic yet. Of course, if we see another 2 or 3 days like this, it can definitely enter in a correction territory. But correction does not mean a stock market crash. The stock market does not look to be hit with with news that can impact it. But now that we understand what the potential risks are, we're going to start seeing a lot of that risk being implemented in stock market, which is the selling off that we're seeing. Like I said, I think we will see a rebound, but there is a few indicators and a few things that I do not like to see, which, you know, we always have to be prepared for the worst and hope for the best. One of the things is that I saw way back in about July time that we saw the Dow and the S&P 500 diverging from each other. So we saw Dow actually been selling off for almost 2 to 3 months now, while the S&P 500 was still making higher highs, all-time highs. And it's usually not a good sign when you see one sector, or, you know, just one major index making higher highs and another major one not doing the same. Usually divergence will cause a bit of sell-off, which we could keep seeing. I do think we still have a lot of time to see. I still think that we're still seeing some more selling off in the next coming weeks, as I've mentioned to you guys before. And don't act like I didn't warn you guys. Literally the first week of September, almost to the top, I said, guys, we will see selling off in September. September will be a red day. In our weekly newsletter, we told you guys, September is going to be a red day. And you guys know me, I'm not a big bear. I don't rarely mention that there's going to be a stock market crash or correction unless I really do believe so. And September was the first live stream where I mentioned, hey, keep a look at the Nasdaq, look at the monthly chart. It's ready for correction, and the Nasdaq of course converts to the S&P 500, the Dow, all these other stocks. So I just want you guys to be aware of all those things. Also, be aware that the divergence between the Dow and the S&P 500, I would like to see it back. You know, now S&P 500 is selling off and Dow is still selling off. I would like to see them both start picking up together to give me some more of that confidence that I'm looking for in the indices. But like I said, if we zoom out to the 10 years chart, we see that there's barely been any selling off. Even if we look at the yearly chart, there's not been any much selling off. Yes, we did lose the 50 EMA. But that's fine, as we did try to find some support. If we look at the charts on the 100 EMA, and that is where we bounced. And if you watch yesterday's video, the weekly newsletter, I said that the next test we were going to have to do was 100 EMA. So now that we tested 100 EMA, as you guys can see, we did get rejected on a support level that we annotated yesterday. And this is why you guys got to keep track of all the videos that we put out, because you guys can see that technical analysis will play out even in the future. You know, what the work that we put in yesterday, understanding the charts, what we're looking for, we execute today, and we can see that, hey, we rejected on a support zone that we thought, because we thought it was going to be a support zone, but it did gap down, rejected, and we could have shorted all the way to 100 EMA, which we did. And then at the 100 EMA, you can start looking to long if you do see signs of an uptrend. So guys, remember, I'm always a technical trader because you can understand that the charts are usually ahead of the fundamental news. I was aware that, you know, I was quite confident we were going to see a sell-off because the charts were pointing towards a sell-off. Now, if you waited for the news, you know, you got caught red-handed. You know, the news came after the big sell-off. You know, I sold off through the news as well, but you lost on a lot of those gains. And you guys can see this last week pretty much put out 2 months of gains. So that's why you gotta listen to technical analysis. Technical analysis is gonna be your best friend when it comes to the trading. And, you know, a lot of these indicators and things that you wait for the news, you know, by the time the news comes out, I'm telling you guys, it's too late. But yes, make money if the stock market goes up, goes down, always make money. If you're in long-term positions, hey, just average down. You should be happy to see some dips, because you wish, and I know you wish you could go back to the 2019 in March when we saw major selling off with the whole COVID thing, and you wish you could go back and buy more of those dips. So now there's dips happening. Do not get scared, because that's usually what happens. You wait for the dips, you're like, oh, I'm gonna buy the next dip, then you get scared of the dip, you don't buy the dip, and you know, you just wish you had gone back and done that. So I hope you guys like more videos like this. I wanted to break it down and assure you guys what the stock market selling off is, because if you're new to the stock market, selling offs can be very discouraging. And you know, if you joined the stock market in the last year and a half, you're not used to a lot of selling offs, but you do gotta get used to this, because it's very, very typical behavior in the stock market. Selling off 10, 15, and 20% are very normal. These are the corrections where you want to buy and then sell the tops, just like we did in the beginning of September. Just like if we watch our live stream, I pretty much said, hey, September is going to be not a great month for both the stock market and the crypto market. And we're seeing both of those. Give you guys a lot of my buy entries for especially the stock market and the crypto market as well. And it's the crazy part is in yesterday's video, we had a few tickers, 3 tickers we talk about, Open and Z, that were both really green on the day, even though everything else was selling off, just to make you understand that in the end, technical analysis always wins over fundamentals. So if you guys like more videos like this, if you guys have any any more topics you guys want me to explain, a lot of things that you may be worried about, that you want me to talk about, just leave all the comments down below. Subscribe to the channel if you want to trade live with me every single day and get a single alert of day trades that I take. Make sure you hit the Discord link down below if you learn more about stock market, crypto market, and learn more about technical analysis. Also, our course access are down below. And remember, October 1st, our prices will be going up, so take advantage of the sale. And I'll see you guys in the next video. Peace.